Hello, everybody. And last week of the year is traditionally the week that we take off. It's really the 1 week a year that we shut it down. And on the last trading day, we take whatever small positions we had on, we zero everything out, and we start over back at $250,000 for the next year. We want to try to keep it real for everybody and show you that it's not easy, but it can be done, that you can actually take a number like that and drive it up to a much higher number. Using the carnivore method and the carnivore tactics and strategies and our picks. And I guess what I have to say is we found some interesting things out when I went back through the analysis of last year's trades, and the average market cap of the stocks that we traded was about $37 billion. So for people who think that we're trading penny stocks or we're doing this with, garbage companies of any type, that's not the case, obviously, when you've got an average market cap of $37 billion. Now, our sweet spot really is in that sort of $2 billion to $10 billion range. We really like those. Trader Z loves a stock that's a $2.5 billion market cap company that's really growing, because it doesn't take much for that $2.5 billion market cap stock to go to $5 billion. And that's a double, for us. So that's 100% return on a position. And we can trade that stock up along the way as it's moving. They tend to also have some volatility. They're vibrating at a much higher level than other stocks. And so that works into our trading style as well. Of our top trades, what we really found, if you look at our top trades, not from a percentage standpoint, because percentages don't matter. Dollars are what matters. How much money do you make on a trade versus how much money do you lose on a trade? So our average win was about $4,000 per trade, and our average loss was roughly about $2,000 a trade. We came in with a what they call a win-loss ratio of about 1.94, I believe, or 1.97. So it's generally considered that you're doing really well if you've got a 2.2 to 1 ratio, which means for every dollar you lose, you're making $2. So last year, for every dollar we lost, we made $1.97. So we came in pretty good. I always think that we're doing better than that, but the truth is it's really hard to do better than that. So anyway, we were pretty proud of hitting that. Obviously, the first 4 or 5 months of the year are usually very tough. We're not dealing with a lot of capital. And when you have smaller amounts of capital, you have to be careful, and you have to try to dig yourself up to a level, or grind your way up to a level where maybe you can actually be swinging into 8 stocks instead of 4 or 5. Because we have to leave room to scale into the positions. And when something starts working, we're scaling in pretty aggressively sometimes. And that's when we also use margin when we're on something that works. So our big dollar trades came kind of at the end of the year when we had a lot more capital to work with. Once we had gotten the account value up to $700,000-800,000, you're also able at that point in time to take some real swings at something that might be a little bit more of an aggressive stock, and do it in enough size that, so if you're right, you can really hit something. Our biggest trade was CCCC. I think we made about $157,000 on that trade. So we ended up with, from $250,000, we ended up with $1.6,423 at the close. Our last month was 38.4%. So that was about $444,000 for the month in actual dollar gains. That's a 540% year to date, with $1.35 million in gains, net gains for the year. That's the final result. The total number of trades we did for the year, actually 994 trades. That's a little misleading because that's not how many names we traded in. The names we traded in was more like about 269 different names. So obviously we're going back into existing stocks that we know their patterns, we know how they act. We call them ex-girlfriends. And then obvious reason. We had 546 winning trades, 448 losing trades. Although it's not relevant, that's 54% winners. The average winner was $4,914. The average loser was $3,085. Win-loss ratio of 1.94. Total dollars on winning trades, 2.6, almost 2.7 million. Total dollars lost on losing trades, 1.3. And that's how you end up with a net 1.6 million and a 540% return on your base. There are some stocks that are worthy of mention that we picked that we did not maximize our return on. I mean, we didn't even get close to maximizing our return on these. The first one is Zion Bank. A lot of you remember that one. Trader Z and I were talking about it, and when it was about $19.95, we finally hit it at 22 and change, and today it's at about 43. Mara at 7, which recently went to about 27. Hut at, I think, $1.40 or something, and it went, I don't know where it went. That's Hut 8. Those last two, Mara and Hut, are both Bitcoin miner stocks. Duolingo, which Godfather helped us out with, because when we first identified it, and it was Trader Z who picked it at about 82, 83 bucks a share, and it rolled up into what, 260 or something, or 275, 280. But along the way, we really didn't know much about this, and Godfather logged in right away and said, no, guys, this thing's for real. He had some experience with it, told us about it. That's the beauty of the carnivore family working together. And it gave us confidence to really pound the table and hit it big. And it became one of our biggest positions, one of our biggest winners. Affirm was another huge one that we did not maximize as much as we could have. We did maximize Upstart. We got a big run on Upstart as well. Coinbase, symbols coin. One that we did not maximize as much as we could have. Basically went from $77 to $185 in about 6 weeks here recently. And, we were almost nowhere to be found in that position on that run. I do know some of the carnivores were having a lot of fun with that. And I just warned them because I said, look, guys, I mean, when it ran, they were buying the hell out of it at 79 and 80 and 85. And it ran up to 185. And I said, guys, you got to put your stops in there because this baby can take it away. And as we've seen the last couple of days, it did. It took off about 45 points from its high. So it's always good to have a stop in there. And in some cases, you have to know yourself, okay? One of the biggest things about being a good trader is you've got to know yourself. If you put a mental stop on something, but you continually violate that mental stop and you actually don't sell it when the mental stop is hit, then you need to start using real stops. Okay, because I've seen people do that, especially with coin there. SMCI is another one that Trader Z nailed at about, I don't know, 80 bucks, something like that, maybe lower. Yeah. What did it do? Go to 400?
I don't remember what the peak was, but it was close.
Yeah, I think it was about 380 or 400. So anyway, that's one that we made money on. We traded it, but we sure didn't maximize it the way we could have. So, I remember I was looking around for a venture capital firm at one point in my career that specialized in retail and stuff like that. And I found some guys in Seattle. And the reason I really liked these guys was they had on their website the ones that they missed. And they told the story about how this guy came into their office and told them that he was going to make coffee an experience. And he was going to call his business Starbucks. And it was going to be like $3 to $5 for a cup of coffee. And they laughed him out of the office. This was his idea, right? And that's all he wanted was like $2 million to start this thing. And they told him to get out, that he was crazy. So they lost probably 20 billion by not being in that deal. So anyway, yeah, Duolingo was our number 2 big hitter, followed by Upstart. And then, you guys, although we dealt with quality stocks for the most part, at the end of the year, we were able to take some shots. One of them was called SHOT, S-H-O-T. And so we actually found that 5 of our top 10 trades were from stocks that were actually less than $1 billion in market cap. So ELF was in there, Affirm, Hut, SHOT, Upstart, Duolingo, and C4. The list is good, is long. I think the biggest mistake we made for the year, because we need to be transparent about everything, is really simply we violated a rule and we wanted to be right, more than we wanted to make money on a particular trade. We paid a very high price in August for adding to a short position that was going against us. That's on me. I'm the guy who shorts stuff. So that's on me. And it all adds up to the fact that we broke the rules. We added to something that was going against us. We didn't put a stop on that trade, as we should have. We went too large on the trade. And obviously, because there was no stop, we held it too long. And what that really means is that's ego. That's just ego. And I don't care what you're doing in life. If you let your ego or your pride get in the way, you're usually going to pay a pretty bad price. And we paid it in August. Conversely, once we took our medicine and sold that position out, I'm kind of proud of what we were able to accomplish after that. And because what we were able to show you was how to get back on your feet when you've been just knocked right off the bike and start to get your confidence back by trading lighter, abiding by the rules, get back to the grind, get back to what you're doing and grind it out. And we put in like a 6% gain the next month. And the month after that, I think we put in like 20, it was 6%, then 22%. And then everything changed on October 31st, November 1st, when the Fed decided to pause. I believe it was it the second or the third pause?
It was the third.
See? So when they paused for the third time, everything changed. And you could not only see it, you could feel it, and it was just insane. So Trader Z had been watching for the bond market to catch a bid. He'd been telling everyone on these conference calls all year, when the bond market catches a bid, that's what we're going to look for going long with stocks, and that's when everything changes. And that's exactly what happened. We did 87% that month. We put the hammer down in November. And we didn't even I looked back over every trade in November, and I looked at it and I said, good Lord, the number of trades we actually missed was as many as we hit. But mom wouldn't give me any more margin money. So December, we finished off at 38%, but we literally tacked on almost $1 million in the account in November and December. So what I'll say is that it was a fun run. It was a hell of a ride. No year is ever the same. And nobody can predict that that's how this is going to work this year. Who knows? And that's kind of the excitement why I'm in this business, is because I hate being bored. And the market certainly makes sure that you're not bored.